Welcome back to The Explainer. Today, we're unpacking a massive, kind of mind-bending contradiction right at the center of today's real estate market. We're currently looking at a true paradox between surging multi-million-dollar corporate artificial intelligence investments on one hand and absolutely plummeting consumer trust on the other. If you're a real estate professional, understanding this gap isn't just interesting, it's honestly the entire blueprint for how you future-proof your business.
Okay, let's dive right into this paradox. On one side, we have record-breaking tech revenue. Zillow is pulling in $708 million in a single quarter, leaning heavily into new AI integrations. But then, you look at the other side of the equation. Consumer trust in these exact same AI home buying tools is falling off an absolute cliff, dropping all the way down to just 16%. How on earth is the very technology driving record corporate profits simultaneously terrifying the average home buyer? Well, that's exactly what we're going to solve today. Here's our roadmap for today. We'll hit the consumer trust collapse, Zillow's AI boom, the Bay Area wealth split, and finally wrap up with an agent AI action plan. Let's get right into it. Starting off with part 1, the consumer trust collapse, where quarterly data reveals a massive plummet in buyer confidence. All right, the absolutely crucial point here is this number, 16%. A recent Catality survey spanning 4 different countries looked at exactly how buyers feel about AI in their home search. Just a year ago, trust was sitting at 30%. Today, it's basically been cut in half, down to 16%. Just think about that for a second. Nearly 85% of consumers straight up do not trust the artificial intelligence tools that are rapidly taking over the real estate portals they're using every single day.
This data really hits the nail on the head when it comes to the nuance of the situation. Look, 75% of buyers totally expect AI to be there. They get it. But 70% across all age groups say that AI errors in real estate are completely unacceptable. They don't mind the algorithm finding the house, but since this is literally the biggest financial transaction of their lives, their tolerance for a machine messing up is absolute zero. And it gets even wilder. 68% want mandatory labeling when AI is used for listings or mortgage recommendations, and a massive 44% actually said they'd pay extra money just to have a human verify what the AI is telling them. Buyers are practically begging for human transparency.
Moving on to part 2, Zillow's AI revenue boom and how the corporate push continues.
Now, what's super fascinating here is the sheer contrast. Despite all that consumer hesitation we just talked about, Zillow just reported $708 million in Q1 revenue, walking away with a cool $46 million in net income. That is an 18% year-over-year growth. And they pulled this off in a housing market that everyone considers to be totally flat. So the corporate push into AI, it's definitely not slowing down to wait for consumer trust to catch up. It is hitting the gas.
They are aggressively rolling this stuff out across the whole board. Their conversational home search, called AI Mode, is actually live right now for about 5% of their millions of users. Over on the agent side, their CRM, Follow Up Boss, has seen monthly active users jump 70% since Zillow acquired it. And internally, Zillow's engineers are using AI to ship 40% more code. That means these features are hitting the market faster than ever. Plus, with Zillow Preview signing over 60 brokerages and extending to Realtor.com, they're capturing something like 75% of all portal visitors. They're basically building this massive, hyper-efficient AI-powered funnel from browsing to touring right through to the transaction.
All right, part 3, the Bay Area wealth split, where AI wealth is creating a K-shaped market.
So how does this massive business boom actually change the physical housing market? Well, according to a Redfin analysis, AI-driven wealth isn't just building new software, it's literally fracturing the Bay Area housing landscape into 2 totally distinct markets. We are watching the real-time creation of what economists call a K-shaped real estate market. Check out this split since ChatGPT launched back in November of 2022. It's honestly stunning. On the high end, luxury homes in San Francisco, so we're talking properties between $3.1 and $7.6 million, have jumped over 13% in value. But then look at the bottom segment. The lower-end, more affordable homes in the $500,000 to $600,000 range actually dropped by nearly 4% over that exact same period. The top is just soaring, while the bottom is sinking, which has pushed the San Francisco metro median home price to a record-breaking $1.7 million.
Now, if you're thinking, hey, maybe this is just a general post-pandemic real estate thing, well, actually scratch that, it's not. Redfin pointed out that this severe divergence is largely absent in other major coastal cities like New York and LA. That completely geographically isolates this phenomenon, pointing right to the boom in AI industry wealth as the specific cause. If you're working in a market anywhere near a major tech hub, this is a huge signal to watch out for, that K-shaped spillover effect.
Which brings us to our final section, the Agent AI Action Plan, and how you could reinvest 5 to 10 hours a week. Okay, so if the big tech companies are accelerating their AI use, but 84% of consumers still do not trust those tools without human verification, guess what? The human agent is the ultimate bridge. To help you out, Inman just dropped a brilliant new framework to position you right in the middle of that gap. It's essentially a system designed to help you strategically convert the 5 to 10 hours a week that AI is already saving you directly into revenue. And it does this by categorizing your workflow into red, yellow, and green zones. Let's break this matrix down. The red zone, that's for tasks you should completely automate right now. Think data entry, scheduling, throwing together market reports. Just let the machines handle that whole shebang. Then you have the yellow zone, which is AI assisted. This is where you use AI to get a first draft going, but a human absolutely must refine it. Stuff like drafting emails or writing up listing descriptions. But the real magic, that happens in the green zone. This is where you pour every single drop of your recovered time. We're talking face-to-face counsel, proactive communication, just being a real presence in your community. Remember those 44% of buyers who said they'd pay extra for human verification? The green zone is exactly where you build that trust they are desperately begging for.
So here's your immediate action plan to actually put this into practice today. Step 1, pick just one red zone task that you absolutely hate doing. Step 2, find a basic AI tool and automate it this week. Step 3, and listen, this is the non-negotiable part. Take that one recovered hour, and please do not use it to just clock out early. Use it for one extra daily face-to-face or voice-to-voice client conversation. You see, AI's real value isn't doing your job for you. It's buying you back the time to provide the judgment and advocacy that algorithms literally cannot replicate.
You are the solution to the real estate AI paradox. As the tech gets faster and faster, the human touch becomes incredibly scarce, which makes it highly valuable. By letting the algorithms do the boring data entry, you completely free yourself up to be that trusted advisor the consumer is desperately looking for. Which leaves us with one incredibly important question to close out this explainer. Now that AI is freeing up your schedule, what are you going to do with your extra hour?